Hi guys, and welcome to Forex Kings. Just Tony here. I'll be going through some market analysis, looking at the US dollar and the US interest rate decision tomorrow morning. So at the moment, the US dollar outlook is neutral to hawkish, so slightly more positive at the moment. The market is pricing in a 25 basis point cut from the FOMC. There is a 79% probability of a 25 basis point cut and a 21% probability of a no change. So there is still a chance that the Federal Reserve, the FOMC, may hold interest rates during the next meeting tomorrow morning. The probability of a 50 basis point cut has completely been priced out of the market. However, there has been further developments which could be seen as dovish since their last meeting, so that the Federal Reserve could still surprise the market with a larger rate cut than firstly anticipated. So the market expects a rate cut. There's a lot more talk about a hawkish outlook, meaning the USD could rally even if there is a 25 basis point cut, unless the Fed does something unexpected and cuts more than 25 points. The market will also be looking to the FOMC speech and economic projections. Now this is essentially a dot plot for future interest rate decisions. So the economic projections, the Federal Reserve provide a dot plot where they may cut interest rates again over the next few months in the future. So not only will the market be looking at the interest rate decision today, they'll also be looking to the dot plot and the speech for indication of future rate cuts. So what's happened in the economy since the last FOMC meeting? Now the trade war between China and the US did escalate further after their last meeting. So there's been more tariffs placed on both sides. Now, although they have now postponed the tariffs until a later date, there is still tensions there with the US and China. I think Trump's now delayed the tariffs until the 15th of October. So we could still see that escalate if Trump doesn't get a reduction here, like what happened during the last meeting in July. Now, manufacturing has also continued to decline in the US economy, and also globally actually. So the ISM manufacturing PMI dropped below 50. Now, a result below 50 indicates the economy is contracting. So the US economy is in a contraction based on the US manufacturing PMI. However, wages growth and inflation has remained on track since the last meeting. Now, the inflation and wages growth is a large influencer of the Fed's outlook and their interest rate decision. So that's a bit more positive. The wages growth and inflation has remained solid, I guess, over the last couple of months. And also oil prices are now spiking based on what's happened in Saudi Arabia. However, the yield curve did invert for the first time since 2007 in August. So after the last meeting, the yield curve has inverted, and now this is a leading indicator for a potential recession. So this may put pressure on the Fed members to turn more dovish. Okay, so that's also adding dovish pressure. So there's a mixture there. Since the last meeting, there's also been some negative news and positive news. So the China and US sort of ceasefire at the moment is a bit more positive. However, the manufacturing is indicating a contraction in the US economy. Wages growth inflation has remained on track, which is positive, and the yield curve inverted for the first time, which is also fairly dovish, as it is a recession indicator. So we're now going to look at potential outcomes tomorrow morning. So, outcome one, the FOMC holds interest rates. This is going to be bullish for the US dollar. Okay, so that means you could look at the US dollar Japanese yen to buy. The Japanese yen safe haven appeal has decreased over the last couple of weeks as the trade war news has been more positive. So if the FOMC do hold interest rates, the US dollar against the Japanese yen could be an opportunity to buy. Now the NZD USD could also be an opportunity to sell, as the RBNZ have been fairly aggressive in cutting interest rates. So if the FOMC do hold interest rates, the US dollar will be bullish, which means we'll be looking to buy the USD JPY and sell the NZD USD. Now, if the FOMC cuts by 25 basis points and the dot plot does not indicate any future rate cuts in the coming months, that will also be seen as bullish for the US dollar. So even though there could be a rate cut, this is the more likely outcome, which is the 25 basis point cut, and the dot plot does not indicate any future rate cuts. This is currently what the market's pricing in. Now that we've seen as bullish or hawkish for the US dollar, so the USD JPY could be an opportunity to buy. Now if the FOMC do cuts by 25 points and the dot plot signals further rate cuts, that's going to be a bit more dovish or neutral for the US dollar. So we'll be looking to buy the AUD USD and sell the USD JPY. Now the reason why we're looking to buy the AUD USD is it's actually been recovering over the last couple of weeks. It's been well supported at the lows it had, and the trade war news has been more positive, so the Aussie could have a significant gain there. Now, if the FOMC do surprise the market and cut by 50 basis point, that will be bearish for the US dollar. So we'll be looking to buy the AUD USD again because the trade war news has been more positive. And we'll also be looking to buy the pound against the US dollar. The pound has also recovered from record lows over the last couple of weeks based on more positive Brexit news and the less likely chance of a no-deal Brexit. So the pound could also have some significant upside. We're now going to move on to the technicals and actually look at the charts and help you look at trading opportunities for tomorrow morning. Okay, so we're going to take a look at the AUD against the USD to start with. So if we just zoom out on the charts, you'll see the Aussie was at major lows. It hadn't been this low for a very, very long time, around 66.80, and the market has now begun to recover. What you'll notice is there is quite a fairly large descending wedge. The market has been trading between a wedge pattern, dropping lower and lower, and it's now starting to recover higher. So the news previously over the last 2 weeks has been fairly positive on the trade war, and that's given the Aussie a bit of strength. So it's actually up a couple of hundred pips from the record lows back in sort of late August, early September. Now, the market did break above a resistance level of 68.24. Now, this zone in red here has been used as support previously, back in June 2019, and also it bounced off that level yesterday. So the market was rejected from the 100-day moving average, which is this blue line. And you can see it's now pushing lower. So if the Federal Reserve cut by 50 points or they cut by 25 and indicate future rate cuts, this could be an opportunity to buy from this zone around the 68.30 handle. Okay, now we'll be looking to target the 200-day moving average, which is the red line, and that's roughly around 70 cents. So probably 69.90 could be a good target level if you're looking to buy the AUD USD. So if the Federal Reserve cut by 50 points or if they cut by 25 and the dot plot signals further rate cuts, we'll be looking to buy the AUD USD back up towards the 200-day moving average at roughly 0.6990. Okay, any stop loss would need to below this support zone. Okay, there can be some volatility tonight depending on the speech afterwards. We're not too sure what the questions will be to Jerome Powell, the chairman of the Federal Reserve. So any comments he has could cause some volatility tonight. So when you're using stop losses, don't go too tight to the market rate. Next up, we're going to look at the US dollar against the Japanese yen. So the US dollar Japanese yen did break out of a triangular formation, and it did touch a double bottom around 104.80. You can see it had a touch around here. Now, during August, the yield curve did invert. The trade war news was negative, so the JPY safe haven appeal was obviously fairly strong. So everything was dropping against the yen. Now, over the last 2 weeks, the trade war news has been more positive. So Trump has now postponed tariffs. Now, the US dollar has been strengthening since then. So it's now broken back into this triangular formation. What you'll find is it's trading at the 100-day moving average currently. Okay, a break above this level, we'll be looking to buy the USD JPY back up to roughly 108.80, possibly the 200-day at 109.20. Okay, so if the Federal Reserve decides to hold interest rates, if they shock the market and they don't cut interest rates, we'll be looking to buy the USD JPY. Stop losses will be need to set below the triangular formation. Okay, because it may come back down to retest the triangular formation before bouncing higher. So if you are buying the USD JPY, your stop loss will need to be below 107.20. Okay, target there for a take profit 109, possibly 108.80 between that zone here. You can see it's had a number of touches in this support zone over the last few years. So any rate cut by 25 points, and if they indicate no future rate cuts or if they hold interest rates, could see the US dollar strengthen. So we'll be looking to buy the USD JPY back up to this support zone 108.90. Okay, so two trading opportunities there on the USD JPY and the AUD USD. One option is to do both trades at a similar time, making sure your stop losses are smaller than your take profit targets. Okay, or if you're going to watch the trade and watch the market unfold, you can then decide to place your trade depending on the outcome.